Welcome, this is Steven Yi. Today, I'm going to go over the Redfin update on Northern California housing markets. Now, before I go any further, just to let you know that I have lived in San Francisco Bay Area for the past 33 years. I have gone through around 3 real estate up and down cycles. So do not use the data I'm sharing with you, Redfin, to make any kind of rush judgments or draw any kind of short-term conclusions because my information tells me the friends, my realtor friends, and my fellow investors and my other friends, we speak all the time, and I follow the real estate market very, very closely, obviously, since I live here for many, many years. Even though I'm a licensed California mortgage broker, I do not necessarily, I'm not a realtor in a local area. So I just promote investment properties all over the country in good areas for our out-of-state real estate investors. That's all I do. So I wouldn't again draw any conclusions or create any kind of a doom and gloom situation because California housing always comes back because I have purchased several homes over the past several decades, and because I invest for the long term, our houses in California have increased multiple times over than the original price. So as long as, what I'm trying to say is if you buy and invest for the long term, there will be dips, there will be cycles and corrections, but over time, long-term real estate will always make people huge amount of money. It is a multi-generational wealth building strategy, whether you are buying a home to live or whether you're buying a home to as a rental. So with that said, I'm going to share my screen and I'm going to talk about the Northern California, San Jose, and San Francisco, right? And let you know what's going on currently. So with the Redfin. So without further ado, typically when I do these weekly videos, I have talk about video. We have done videos on many markets in the U.S. so far, and if you watch my YouTube channels, you will notice that we expand our video presentation into many markets. Recently, we will continue to do so for the foreseeable future. So you know the big picture, understand what's going on, all right? And so the format I'm going to use is, I'm going to use 7 metrics on each market I'm going to discuss using these Redfin data. First one is new listings, second is active listings, then pending sales, then price drops, then median sales price, then average sale to list ratio, and finally month of supply. So let's go through San Jose first, then for the first 10 minutes or so, then I would segue and do San Francisco housing market. All right, so let's go through new listings in San Jose. New listings at this time is at only 272 new transactions in a city of more than 1 million people. When San Jose, there are many sub-markets in San Jose. There are Sunnyvale, there are Los Gatos, there's Los Altos, there are Cupertino, there is and Santa Clara. There are Milpitas, many sub-markets within the San Jose metro that have a lot of population here. So with that said, new listings is trending down from the peak of May of this year, all the way down to dated October 16 as we speak, and the listing is 272. Like I said, is a 20, almost 29% fewer listings from this year versus 2021, which is right here. Just to clarify, the black line is 2022, the orange line is 2021, and the red line is 2020, and then the blue line is 2019 before the pandemic. All right, so new listings is decreasing, and which is not surprising. So let's go over to active listings. Active listings again is once we're at a peak back in July 31st, up here at 2,500 transactions, and now this is steadily decreasing. By the way, now that the mortgage interest rate is hovering around 7%, and with the seasonality of the typical housing market at this time of the year, we expect less housing transactions. Less people are selling and less people are buying. On top of the skyrocketing of the interest rate from 3.5% early this year to around 7% currently, there will be a lot of pullback in demand. So we can see this trend line of active listings to be continually decreased for the remaining 2 months of this year, 2022, and for 2023 first quarter and 2023 second quarter will be very interesting in the next 9 months how these trends will play out. So remain to be seen. All right, so the third thing we can do go over is pending sales. You know what's going to happen. The pending sales has been plummeting pretty dramatically, and at the peak, the pending sales were 392, and which is similar to 2021. Then ever since March, we have seen decreasing pending sales all the way down here. Then it went up a little bit a few months ago, now trending down again to a point where there were only around 205 pending closing housing transactions, which is mind-boggling because it is 42% pending sales less than 2021 year over year. And 2021, at the peak of the housing boom, a year ago, we're seeing multiple offers and bidding wars, and sometimes we're seeing on a weekly basis, I've seen $1 million above asking. Let me repeat that. The past 2 years of the pandemic real estate boom here in California, especially in the Bay Area, we typically see on a weekly basis some homes that were sold at $500,000 or more than $1 million above asking price. Mind-boggling, but those days are over. O-V-E-R. Now the buyers have a level playing field. Buyers have more leverage, have more power. So anyway, so very drastic reduction in pending sales, and I believe this trend will continue to go down for the remaining 2.5 months of this year, and probably into next year, first and second quarter 2023, depending on the interest rate situation. Okay. All right. So next is price drops. Sellers. I know what to do. I mean, the price drops actually has, like many other markets, we're seeing sellers, even during the rate hike, the dramatic rate hike in the past few months, they're not getting the memo. They continue to list their price much higher than the market demands. So they have to lower their prices, their list price, all the way to the peak of the percent of active listings with price drop, which is almost 9% on a weekly basis. If you quantify that in the monthly basis, around 30-something% of homes have to drop their initial list price up until August the 7th, and then from August until September, a month later, until September 4th, the list price, the new listings of homes are really came down to a realistic level relative to the housing demand, but then it went up again. So a little bit crazy, this trend line. So anyway, it's not that important because the next thing is that we can go over the median sales price, which is very important. Median sales price for the past 3 years. As a matter of fact, let's go over the pre-pandemic 2019 median price of a home back in May of 2019. The median price of a home in San Jose is 1.175 million. And then a year later, 2020, right at the start of the pandemic, it has increased 3%. Then you see these massive increases in prices from 1.2 from 2020 to 2021. So 1.2 to 1.38, which is an increase of 14% year over year appreciation. Then from 2021 to the peak of 2022, which is May 15th, 2022, we've seen another 19% year over year price appreciation. So 19% plus 12%, which is 31%, plus 4, 35%, plus 5, almost 40% increase in past 3 years, which is very historic, right? That's what's happening during the pandemic. We said boom. But then here is the big kicker, something that I have not seen when I do this video, as I do this video with different metro, different cities. I have not seen any price reduction this dramatic as I'm showing here, about to show you right now, because the peak price seems I would say the median sales price is 1.6 million back in May. Now fast forward June, July, August, September, October, 5 months later, ever since the interest rate hike from 3.5% to 7% right now, and the drop has come down all the way whereby the median sales price as of October 16th is 1.365 million. And then therefore, if you compare October 2021 to October 2022, we have only seen 1% increase. So all the increases in the past year has gone for nothing. All right. So think about it. So 1.62 all the way down to 1.3, we're talking almost what? Almost $300,000 less in median sales price in a mere 5 months. So you do the math. What's the percentage? 1.6 down to 1.3. We're talking. I should have done my calculation before I did this video. So is it more than 10%? Is it perhaps 20%? Yeah, 20% multiplied by 1.6 to 320, not quite 20%. I would say 17% price reduction, real price drop. I mean, yeah, that's what's happening. So this is the most dramatic price drop I've seen with any housing market. So San Jose, I don't know what's going on, but I'm not seeing people. Just so you know, okay, I have a lot of friends in the Bay Area, and they own these kind of homes. They're not panicking because most of them are not selling. They're staying put, right? They're gonna ride out this correction because they're smart. So only the distressed, panic sellers are selling. So if you're a seller, if you have to sell due to if you must sell for whatever reason, death, disability, or drug, triple D's, I don't know, death, disability, and whatever. So you have to sell. Then you have to understand what's going on with the market. You're not going to sell at a top price. You have to drop your prices because the demand has subsided substantially. Well, anyway, so who knows how is this trending? But again, people in the Bay Area, people in California have lots of money they can afford. Not all of them they can afford these kind of high prices. They have a down payment. Although lately we're not seeing that, but it'll come back. The Californians are very resilient. They expect these kind of things to happen. They have high-tech Silicon Valley. They have tons of money, are still out here. Remains to be seen how this trend is going to go in the next few months. But all right, so that is a median sales price, which is a very, very important metric, obviously. And then the two remaining metrics: average sell to list ratio. Average sell to list ratio again is at which is at 100%. That means wherever is the final ask price by the seller, the buyer accepts the price at the price that were offered. Whereas before the sudden interest rate hike back in March and April, look at this. Bidding wars and multiple offers were still happening 6 months ago before the rate hike, and then whereby the average sell to list ratio is 1.14%. You know what that means? That means 14% of the homes are sold over the asking price. So hence the multiple offers and bidding war that occur in the early part of this year, and no more. Those days are long gone. And finally, the last metric that you need to understand very, very clearly is the month of supply. As you, if you do not know, is the economics 101. It's a fundamentals of real estate. If typically 5 to 6 months is a balanced market. 5 to 6 months is balanced market whereby the buyer and the seller have equal power. Is a healthy market. Anything less than 5 to 6% is still a seller's market. Still, the seller still call the shots. So with that said, let's go over what Redfin has to say as of October the 9th, October 11th actually. The week of supply is 7.4%. So you divide 4 weeks into 7.4. So what is it? It's not even 2 months supply of inventory. It's even, look at 2020, last year, October, at the peak of the bidding war multiple offer situation last year, there was just the weakest supply of inventory is 1.1. Wow. No, I'm sorry. 4 dividing to 5.2 for 1 is what 1.3 month of inventory last year, 2021. Extremely low inventory, and that, you know, with the low interest rate last year, that's why you're seeing multiple offers happen last year. But now the month is still less than 2 months, so it's still very much a seller's market. That clearly tells me that right now it's still very much a seller's market. It clearly tells me that the sellers are not selling anymore. They are staying put. They're locked in at their mortgage rate of 4% or less. There's no incentive or little incentive or motivation for them to sell their home, in which they are have a, you know, like 4% or lower 30-year fixed rate mortgage, and then buy another home which potentially costs more and have to pay a 7% interest rate. So it'll at least double the mortgage payment from 4% to 7%, right? That is mind-boggling. So sellers are not selling, buyers not buying anymore because of the current 7% interest rate. So there's a stalemate. There's a stalemate between buyer and seller. Nothing's happening for the rest of this year, which is only 2 months left, by the way. So it's just it's a very challenging situation. So the low inventory is the key driver, is the key takeaway. This low inventory is just as worse as last year and the year before, when there were multiple bidding wars at 3.5%, whatever. The only thing that's stopping people from buying homes, from achieving higher demand, are the Federal Reserve and their ambitious way to lower inflation by raising the interest rate. So that is what's happening. All right, so let's go over the let's go over the San Francisco market. All right. So San Francisco market, new listings is kind of so weird. It's up and down, up and down. It's not going, it's not really consistent. But at the end of the day, it's down right now for the past month. Only 274 new listings came on recently. And in the city of San Francisco, we have more than maybe 750,000 people in the city limits itself, then the surrounding peninsula, like Redwood City and Brisbane and San Mateo, the submarkets below the peninsula of San Francisco. There are several 100,000 more residents. So you could make the argument that this category, San Francisco, we're talking like 1 million people living here, right? And nevertheless, the new listings is down 27% year over year from last year. Once again, so you know what that means, right? So with that in mind, let's go over active listings. See what's going on there. Active listings are pretty consistent at this rate, increasing just a little bit to a point where right now there are 2678 transactions, active listings, which is slightly higher than a year ago, which is a 2% higher. And then let's go over the pending sales. So pending sale is kind of weird as well. We're at the peak of pending sales back in March, and then went all the way down to around July. Then went all the way kind of trending up again in the past month to a point where there are 218 transactions pending, closing of escrow, and which is still like 31% less than 2021 pending transactions. So we are seeing decreasing sales, decreasing active listings, decreasing new listings. So once again, here are the trends: lower inventory, which is gonna exacerbate the next few years and beyond in terms of the supply and demand fundamental curve. All right, so the next thing we can go over is price drops based on initial listings. And again, the sellers are very stubborn. The past couple of months, they still want to list their price higher than what the market demand. Perhaps they are not hiring the right kind of realtors. So, to a point where October, they have a percent of active listings with price drops are 6.6%. So if you, on a monthly basis, that's about 25% of the sellers are still listing their price too high, so they have to reduce their prices accordingly, that's what's happening in many markets, not just in San Francisco. So, and then let's go over a very important metric, the median sales price year over year, and here it is. At the peak of 2022, back in May, the median sales price was 1.66, which is still 9% higher than 2021. So we're seeing systematic appreciation in the San Francisco market. And then May, so let's fast forward to October, and the median sales price is 1.49. So 1.66 to 1.49, not that much of a drop, maybe like 5% or so. Can't do the number, 166 to 1.5. They're like $150,000 drop over the past 5 months. So it's less than 10%. So yeah, the price has decreased accordingly, but not at barely at the double-digit mark. So 160,000. Yeah, around 10%. So that's you know, there's a drop, but it's not a crash. It's a correction. So again, remains to be seen what's going to happen down the road. All right, then average sale to list ratio. Once again, not too much difference. Almost 2%. Buyers are getting 2% lower than the final asking price by the seller right now. And so a little bit of a buyer's concession, and they have leverage in negotiation, whereas at the peak back in April this year, the buyer had to pay 13% over asking, which is quite dramatic drop. But then again, not surprising. And finally, months of supply, critical metric, which is economics 101. So, and here it is. Weeks of supply is almost 14 weeks. If you divide 4 weeks, which is 1 month, into 14 weeks, so we have a little bit of a little bit more than 3 months supply of inventory, right? So 3 months supply inventory clearly is still a seller's market, and that's how it is. And even though the inventory has been increasing slightly, still at very look at over here. Look at April. The weeks of supply was 2 months of inventory back in April at the lowest point, from increase from 2 weeks to three. I mean 2 months to a little bit over 3 months in a span of 5 months. So anyway, I think anything else I have to say? I think pretty much it. So I just covered the main high level of the San Francisco Bay Area. Yes, I'm not surprised because I've lived California's always has been a cyclical market. Price go up quite dramatically in the past, but they also can come down. A mere 5 to 10% drop in the median price is pretty significant because of price of homes is so expensive. So even with up to 10% price drop, is still the Bay Area obviously is one of the most expensive housing market in the country. Has been like this forever, not just this year. So still very unaffordable for most people. Only for the few that are in the high tech, the highly compensated individuals, they still can afford to buy homes, and they could be around. So again, my takeaway is I don't see a crash in the Northern California housing market. This is a correction, pretty much to be expected. But long term, hey, as long as people want to buy now, they could, as long as they can afford it. They have the emergency funds. They like the area they want to buy in. They want to stay in the house for the long term, 7 to 10 years. They will be fine. They will make their money because real estate is a long term investment. So if you do anything less than short term, then you are in for a situation you don't want to be in. All right, so that's my takeaway, and so that's our market, and people not being stressed about it. They move on. And hopefully, everybody think long term. California real estate market will always bounce back. It's always a desirable place to live, mainly for people that have the means to do so. All right, so hopefully we see a lot of value from this video, and if that's the case, then smash the like button and also subscribe to my channel. I'm trying to build up my channel, and also subscribe to put down your email into my newsletter database on my website below, and so you can become a member of our real estate investing community, and there are several thousand members of you. You can get free information on a weekly basis on real-time practical investment opportunities in the best markets in the country, affordable markets, And a lot of California have a lot of equity in your homes. If you want to do a 1031 tax deferred exchange to out-of-state property, you can exchange one property for 5 to 10 out-of-state properties and get more cash flow, get more appreciation, more diversification. Uh, that's the right thing to do for many of you. So don't put all your eggs in one don't put all your eggs in one California basket. I know a lot of you, if you own a home in California, you have achieved massive amount of appreciation, especially when you own it for more than 3 or 4 or 5 years in the past. So again, we want to diversify. Just learn more about into out of state. You can buy multiple properties doing 1031 exchange, whatever, and so you could create some massive amount of real estate wealth above and beyond this high, extremely high cost California area. So thank you so much for attending, and we'll continue to do various videos in many markets, including California, monthly updates, whatever, through Redfin and other resources. Thank you so much for listening. My name is Siwen Yi. Have a nice day. Bye-bye. See you next video.